Well, the 10-year yield dropping after better than expected demand at today's Treasury auction. The results calming fears that foreign buyers are avoiding U.S. debt as a protest against tariffs. The move in rates coming ahead of tomorrow's Fed decision, the first since President Trump announced sweeping tariffs at the start of April. Let's get more on what we can expect from the Fed tomorrow. Bring in CNBC contributor and former Dallas Fed President Richard Fisher. Richard also served as the U.S. Trade Representative and is now a senior advisor at Jefferies. Richard, it's always a pleasure to welcome you to Fast Money. Great to have you.
Well, honor to be with you guys.
What do you think the Fed should do? Not what the Fed will do, should do.
I think it's like any other business. They can't make a decision here given all the uncertainty. How do you model out the economy going forward and make decisions where you don't know what the variables are? So I don't expect anything tomorrow, and I may not even be expecting anything in June. We'll have to see. We need clarity. If we don't have clarity on what's going to impact the economy, then I can't see them making a firm decision here.
When do you expect the impact of tariffs to flow through to the hard data? Some economists are saying May, which would give them a possible data point for that June meeting coming up.
You know, it really depends. Agreements in principle don't give you much guidance. I'm expecting them to make some announcements. But let's say they do agreement of principle with Korea. Korea's in the middle of an election cycle. They have to go to their own legislature. They have to go to their own lobbies. I negotiated the opening of Vietnam when I was in the Clinton administration as deputy U.S. trade rep. You know when it was finally signed, we got all the specifics done after 4 years of work? By the Bush administration. So these things, and every manufacturer I talk to and every business I talk to, what they're interested in are the specifics, not just the grand sweeping statements. So I think market operators need to be very, very careful here. If we get these announcements, it doesn't tell you very much. It tells you intent. And then the nuts and the bolts have to be worked out. We have a very good USTR right now. It may be that he can move us faster than anybody else has been able to do before him, but we'll just have to see.
Hey, Dick, when you were a Fed president, I assume that there were times in which you would vote within that room. And you know, a lot of what goes on there, from what I understand, is the Fed chair tries to kind of rally support for a different view. If you were considering what the dissenters would have to say, like, help us think through that right now, because it seems to be one of these things where it makes sense to most economists not to move right now. But I'm just curious, if you were in the room, where would some of that dissent come from?
Well, I think first of all, Jay Powell's been able to hold this group together pretty well. The dissent often comes from an honest disagreement. It's not harsh. I happened to dissent a few times, and others did the same thing. And then typically the chair will acknowledge your dissent, but then ask you if we are going to proceed as we have written it up. How would you make this better? You understand what we're trying to get done here. You've been overruled. Help us put into effect whatever we have decided. And so you work on the wording a little bit. We used to have a straw vote all the time. Bernanke was very good about that. Yellen was very good about it. And it was in that way that the statement gets formed. So were I at the table right now, by the way, I'd be arguing we don't have the clarity to make a decision. But I'm not at the table. I'm a retired dot, by the way, a former plotter. So, by the way, I hope we're going to talk about energy, because there's a lot going on in that sector.
We'll get to that in a minute, Richard.
I'm trying to avoid this forecasting of what they're going to do.
When you think about the Fed not moving tomorrow, and probably not in June, it sounds like that sets the stage for the Fed to have to go bigger later. So almost bakes in the Fed being late and increases the chance that the economy tips toward maybe it's recession, maybe it's just a bad result. But the Fed has to get really aggressive late in the year. Do you think that's right? Do you agree with that line of thinking?
I don't know. I mean, we'll just have to see. First of all, a lot of data has to come forward before June, perhaps more clarity. We'll just have to see as this goes through time. It's unusual for the Fed, except for under dire circumstance, to make a dramatic move. And really what you're looking at when you're at the table is the health of the credit markets. It's not the stock market. Of course, you're worried about inflation, deflation, employment, unemployment. But the one thing that could force them to move dramatically is always going to be if the credit markets seize up. which is what we saw in 2008, 2009, what we saw in March of 2020. And then you announce a new facility as well as perhaps rate cuts. So don't forget, they're also trimming the balance sheet, but that's slowed down. They're getting close to the right size. So there are several tools you can employ. You can make announcements. You can create new facilities if you need to. They may not even be used, which is what happened in 2020. Or you can cut rates. So we'll have to see.